Hello guys, good morning everyone, good morning. Okay, so I want us to have a breakdown on DXY and GU today. So get yourself a cup of coffee, take out all the distractions and let us look at what DXY is doing. So yesterday I made a video on DXY and today we are looking at where we can have potential entries on DXY. So starting from our weekly time frame, as you all know is the beginning of the week. So I'm going to head straight to the weekly time frame, and starting on our weekly time frame, as you all can see, we had a CRT on the weekly time frame. We had a good CRT on our weekly time frame. So I'm going to start by taking out all of these drawings. I'm going to take out everything and let's start from the beginning. Okay, so as you can see, starting on our weekly time frame, we had this weekly CRT formation. We had this weekly CRT formation, the CRT high and the CRT low all the way here. And I always say 50% of your CRT also is a key level. So when you see a CRT reacting in the opposite direction, like you can see we have been in an uptrend and this CRT is giving us an opposite momentum of the market. That means we are having a CRT in the opposite direction. So you take your Fibonacci from your CRT high to your CRT low and you mark out the 50%. So low to high, this is our CRT move, and you see price is reacting presently at our 61.80%, which is also a valid key level. So you mark it out and you head down to the lower time frame. And now, why am I using this area as a key level? Because this area reacts as a weekly order block. So you can see price disrespecting this order block. Price is not closing below this order block. Price rejected and closed above. So price respected this order block and giving this order block a good key level. So you see the CRT is reacting at the weekly order block, which if we go to the daily time frame, you're gonna understand why the 50% of a CRT is always a valid key level as a CRT trader. So as you can see, price has been giving us break of structures to the upside. You can see here we have been having break of structures pushing to the upside, and price came back down to this order block. So now this is an order block. This is an order block. So where is price reacting? Price is presently reacting at this order block. That's where we are looking at price now. So we have a high momentum of price pushing up to the upside. So from here you can see price pushing up to the upside. So what are you expected to see in the market? So now what I am expected to see, I am expected to see a push, because you can see price came down to sub this order block and give us this rejection. And you can see on Friday we had the candle closing above this previous candle, not closing with a body below, telling us that there are more buyers in the market. The buy momentum in the market is massive. And as you all know, we had a monthly fair value gap up here that we are anticipating price to take out. So now this area now reacts as our new draw on liquidity. So up here, this is where our new draw on liquidity is sleeping. So I'm gonna label it dull, which also stands as our draw on liquidity. So this is a swing trade on the daily time frame. So now I will go straight to the 1 hour time frame, and let's look at what the 1 hour time frame has to tell us. Remember, we are looking at buying opportunities in the market, but this is Monday, and what are you expected to see on Monday? So you're expected to see price reacting on key levels. So as you all can see, price has given us our market structure shift, or our change in character, as so many traders call it. You can see you have a change in character or a market structure shift here. Now, what am I looking at price to react? I'm looking at price to come back all the way to this fair value gap. So I mark out this fair value gap as a key level. So you have this FEG, which is this fair value gap, and going down to the 15-minute time frame, you will see on your 15-minute time frame that we are expecting price to come back to this key level, which on the 15-minute is an order block. So now, what am I expecting to see in price? What I am expecting to see in price is I'm expecting price to push to the downside, so I'm expecting price to come down and collect all the liquidity slipping down here. So as you all know, I don't usually trade on Mondays, but pretty enough today Monday I'll be looking at sell momentum. So I want to see how price we're gonna react around this area. I want to see the reaction of price, because around here I can see a slight inverted fair value gap. Around here we have a slight inverted fair value gap, so I just want to see how price is gonna react in this inverted fair value gap. And definitely I'll be looking at the sell, but remember, we don't trade on Monday, so Monday is the beginning of the week and you want to let the week play out and you understand your biases of the market. So we will be looking at sell momentum in the market today. So going down to EU, let's go down straight to EU. So let's head down to EU and look at what the market has to offer on EU. So this is EU. We go straight to our weekly time frame as usual. Top down analysis, we start from the highest to the lower. So we start from our weekly time frame, and as you can see from our weekly time frame, we have price giving us this CRT. We had price giving us this CRT on the weekly time frame. So as you can see, we had the CRT high and the CRT low. So I'm gonna just quickly mark it out. CRT low here and our CRT high all the way up here, as you can see. And funny enough, price took out more than the 50%. So as you can see, this was our CRT low, CRT high, and our 50%, which we are going to plot on our key level. Yeah, so as you can see, where is our 50%? So price is reacting at our 78 point. So there's one thing about the Fibonacci. You see the 50%, the 61, and the 78. Those are key levels. But now the 78% of your Fibonacci is your like, how can I put it in a way you're gonna understand? Year of premium and discount. But now the 78% is the last area where if price violates the 78% of your key level without respecting it, that means price is definitely or likely going in the opposite direction. So after marking out your CRT, you come to the daily time frame, and what are you gonna see? You can see price reacting at this area. So price came, took out this other block. So the CRT high also reacts like an other block. You can see there was an other block here, that the soup, and you see price trying to display to the downside. So going straight to maybe, let's say, the 1 hour. Yeah, let's go to the 1 hour time frame. You are also gonna see price giving you that market structure shift. You see, you have the market structure shift. But where am I interested in looking at price? I am interested in looking at price at this level here, because at this level we have a inverted fair value gap sleeping here. So this fair value gap is going to be my entry. I'm expected to see price to come up, take out this fair value gap before pushing to the downside. So this is what I'll be looking at on EU. So okay guys, let's watch how the market plays. And today is Monday. Play safe, good risk management, and avoid trading today. Allow the market to breathe and give you that bias you are expected to see in the market.